Well, thank you so much for joining us today. I'm Marlin Bohling with you, your tour guide to the ag commodities. Happy Monday. And things are happening on the grain trade. Why do I say that? Well, let's take a look at what the board is doing. Let's go to the corn board here first and see just what in the world is up. Remember how we opened up the corn board about 4.5 lower on that May contract? Well, now it's only 1 3/4 lower, and we're at 638. Now, keep in mind, we did have a couple of overnight export sales to talk about. I'll get to that in a second. On the December corn right now, we're 2 1/4, now 2.5 lower at 568.5. So we have cut our earlier losses basically in half here this morning. Now, just a reminder of the overnight export sales reported this morning by USDA. It was a couple sales of corn, one to Japan for 110,000 tons, and he had another sale to unknown destinations of 182,400 tons. And it didn't seem to have any influence on the market as we opened up, but maybe they're starting to build it in a little bit now. Who knows? Let's see what the soybean trade is up to right now. On the big board, we have soybeans. Gosh, they were 1/2 cent lower on the open on the May, and now we're 18 3/4 higher at 1537.5, making a new high for the day. They're suddenly making a run here in this soybean market. You have July now up 18 cents, and it's at 1524 per bushel. Let's check out our new crop November, and it's now 11.5 higher at 1384.5. Well, on the wheat market, now remember, they were really punishing the wheat early on. We're moderating a little bit. You have May Chicago wheat still down 9.5 at 699.25. So technically, we are still under the $7 mark there. In the Kansas City market, May is down 11.5 at 804 3/4, but it has clawed its way back above $8. Now in Minneapolis, we have May down 3 3/4 at 869 per bushel. And in our cotton trade, we'll go with July, it's 48 points higher at 85.27 per pound. December up 56 points. Well, I want to welcome aboard Mr. Chris Swift of Swift Trading. He is based right here in Nashville, and I'm sure you were probably in transit when all of a sudden the soybean trade just totally reversed out, and now we're sharply higher, 18 higher. Yeah. This is a goofy market ahead of a WASDE report coming out in a couple of days.
Well, it is, and we saw this last week too. We traded lower for most of the week. Then towards the end of the week, everything kind of bolstered higher. So we started off last night a little bit softer, and I'm not real sure what's gotten into the market this morning, but clearly it looks a little thin when you look at trading like that to take place that quick, or there's something that has taken place that we've not seen yet.
I heard the 8 to 14-day forecast, I believe, for South America showed dry conditions continuing in Argentina again. But, I mean, seriously, aren't we at the point in the growing year to where who cares anymore?
Yeah, I don't think you can make or lose too much more from there. I think the big push right now is going to be Brazil and getting them harvested, and maybe we see some slowing down. That corn export to the unknown destination, we saw that China came in last week and bought 3 cargo loads, and I think a lot of it is we're right at the tail end of just before we can start the exports from South America to China, so China's still having to come into the U.S. and purchase some goods.
Now, why trash the wheat like they're doing today?
I think the rain. I think we're getting more and more rain into the wheat belt. And, of course, increased acres. And in the spring wheat, clearly they get a lot of moisture up there.
Okay. But do you think it makes that much difference?
I think it does, yeah. I think it's what we've been dying for the last 2 years is moisture. So now we've got it. So it can't help but be a good thing.
I did hear more talk again this morning that La Nina is basically almost officially dead. You can stick a fork in it. So the weather patterns are expected to change here in the U.S. So that would be a good thing for a lot of folks trying to get out of a drought. Yeah, you're right. Okay, we'll pause right here, and then we'll come back and we'll take another look at our livestock trade on a Monday right after this. Well, we're back with you talking with the one and only Chris Swift of Swift Trading in Nashville. Now, I wanted to take a look at that livestock summary from last Friday. And I mentioned earlier in the broadcast that once again, they waited until the very end of the week before they really got things rolling out in the cash market. So it looks like we ended up last week with the live cash cattle in a range of 164 to 165.50. Sounds like the vast majority was right around 165. I believe that was about $1 higher than the week before. Dress basis sales, pretty wide range there. 262 to 268 on the upper end. And Chris, I believe that would be what, $4 higher on kind of on average than the week before?
It is.
That was fairly strong, right? Did
It
you see that?
is good strong, and we've had good box prices too. Boxes were up last week. The weights year over year are down pretty sharply because of the bad weather that we've had, but week over week they were up just a little bit, and going through the rest of this spring they should improve quite a bit as we go forward, improving weather.
So does that mean the supply is that short, or does that mean the consumer demand is that relentless?
It's a little bit of both. There clearly is, we're slaughtering fewer animals. Although the weight has increased, when we look at the average slaughter weight, it's increased. But we've not seen anything as far as the consumer goes where we would say, well, they've really started to cut back now. It's just been very consistent. And with the lower amounts of slaughter rate, then we can kind of start to see that feel. And we're seeing it in the higher box prices.
So if you see, for example, the Fed continuing to raise the interest rates, do you think that's finally going to weigh on this meat market or not?
I'm not real sure, because we seem to be having two different things. We have the Fed wanting to increase interest rates, and yet the current administration continues to dole out more subsidies and wanting to print more money and just give the money out. So anytime you give money out, then that's buying power, and they're trying to stop it on one end and continuing to funnel it on the other end. So I honestly don't know.
Almost like taking money out of your left pocket and
put it right back in the
right
other.
pocket.
That's right.
Yeah. All right, let's take a look at what's going on here with our current prices then. Our quotes are from Bar Chart. On live cattle, we have the April up a dime right now at 165.52. June is 7 cents higher, so just not much going on the live cattle side. However, you had the April feeders up 92 again at 196.95. But even that is 90 cents off its earlier high. And boy, they were really roaring out of the gate this morning to the upside. May feeders up $1.02 at 201.97. Who would have thought? All the deferreds are over $1 higher. And lean hogs this morning, they're narrowly mixed. And it looks like the weakness is in the nearbys. April down 7 cents, May down 15. But the deferreds, you have July up a dime and August up 17. So take your pick. All right. Well, thank you so much to Chris Swift. Thank
Always
you very
pleasure.
much. Always enjoy having you come in. He's with Swift Trading right here in Nashville. Janet, back to you.